Well, hello, my crypto brothers and sisters. Welcome to another Money Monday live webinar. I'm your host and DeFi expert, Kelly Sunshall. October is here, and today we start a new theme. Today's topic is crypto analysis, finding gems. Now, the theme for October is crypto analysis, which is another word for fundamental analysis. And today, I'm going to go over the general framework for doing this kind of research. I will start by explaining the overall process of doing crypto research to find hidden gems worth investing in. We'll follow the framework created by Double Your DeFi. It's a training I did some time ago. This topic has a lot of information to unpack, so I plan to go slowly today. But for the remainder of October, I will continue to cover the general topic of fundamental analysis for crypto. So today's focus is going to be, as I said, on the framework developed by Double Your DeFi, and they call it the PPPF framework, and that stands for People, Products, Plans, and Financials. So let's just jump right into it. Finding gems is no easy task, believe me. It takes a great deal of patience and research. In today's webinar, I will introduce you to a research checklist that I learned from Double Your DeFi during a training session I did with them. So let me grab the PDF. Just to keep it easy and simple for me, I'm going to use this already created PDF. Let me zoom in a bit. And we're just going to go through this and see how far we get into it. So we start this research investment checklist with the first P of PPPF. And that first P is about people. Remember, we're reviewing how to do research to find a project that is worth investing in that everybody else isn't already invested in, because that's how you make big money in crypto and in any investment, whether you're doing stocks or real estate or whatever. You want to find those hidden gems. And we start by looking at the people. Who is the team? How do you do that? Well, you can search their LinkedIn profile to find their background. If they're anonymous, it's going to be a little trickier. You might try to search for their Twitter handle and see if there's any comments about them. You want to look and see, does the protocol, which is the project, does it have any partnerships? Partnering with reliable protocols or other projects will give you a higher level of confidence in this particular project. You can also do what's called a vibe check in Discord, but you can also do that across all of social media. Now remember, this is a framework that I got from someone else, and I will be fine-tuning this checklist to create my own version of it and add my own twists here and there. And I will be uploading that as a quick guide to the MasterMind. So in doing a vibe check in Discord or in any other social media, you want to find out how enthusiastic the community is about the project. Check for channel activities and ongoing events. How does the team react to setbacks? And this is very important. Setbacks in crypto and in DeFi specifically always happen. It's important to see how well teams respond to them. Look for professionalism, not emotional responses that basically blame others for their problems. You might also see what the team is focused on. A good team will focus on the product. Excessive discussion about the price action of their token is a red flag. You want to find a group of people who believe in what they're creating to the point where that's what they talk about more than just the price movement of their token, because that could be a red flag that there's going to be a rug pull coming. You want to look at their social media posts to judge what their focus is. You can also read their white paper and things like that. We'll get more into that as we get going here. All right, so the next P in the PPF framework is about product. What problem is the protocol attempting to solve? This is the business value of their product. What efficiency is created by solving this problem? These are some questions you can ask yourself. And there's a lot more that we could delve into about all of these topics, but I'm just giving you the general overview of the process. What is the current meta? Well, let's see what that means. The meta represents trends and narratives. Is the meta favorable towards the protocol? For example, we recently saw a decentralized perp, that's a type of DEX, meta in DeFi. Projects that fit in that meta did very well. It's kind of like saying what's the current narrative. So you can think of meta and narrative as being very similar. So is the token on major exchanges? This is really good too. Major exchange listings can make it easier for new investors to onboard. When there's a token or project I'm interested in and their token is not available on a major exchange like Coinbase or Kraken or Binance, it can be very difficult to acquire that token. And if that's the case for somebody who's experienced like myself, then you can imagine that the general populace might have difficulty buying that token, and that's going to affect its future value. Another one under product is, how is this project's product different from its competitors? New products need to offer something new and cannot be a pure copycat. Compare older protocols to this potential investment. For example, it seems like, well, it doesn't seem like every new chain that gets created, the first application or product that gets built is almost always a DEX, a decentralized exchange. And do we really need so many DEXs? Well, that's debatable, but that's an example. It's like, and then once the first DEX is built on a chain, then oftentimes there'll be copycatters that will build other versions of a DEX. And at that point, I would not be interested in multiple versions of a DEX on a single chain. It's something to consider. And here's something else you may not have thought of. What moats does the protocol have? So moats is a very specific terminology used in investing. Moats are features of a business that competitors cannot overcome. These could be partners, revenue, brand, etc. For example, who can take the place of Joe Rogan? Well, I don't even know who Joe Rogan is, so in this comment is no one. So think of a moat like a castle. The moat is the actual body of water around the castle that keeps enemies, you might say, away from the castle. It keeps enemies from being able to attack the castle. Same thing in a business. The moat represents how has a business overcome a need in the market and created their own products such that their competitors can't easily overtake them. So that's just what a moat is in a nutshell. We could go into that quite a bit, but I will leave it at that for now. And the next one is called plans. So the third P in the PPPF, we had people, products, and the third one is plans. So under plans, you want to look for their white paper and potentially Gitbook. Gitbook is just one version of an explainer website that can tell you all about their project. So evaluating the writing, is it clear? Is it, do they speak English? And if not very well, that doesn't necessarily mean the protocol is bad, but for me, it is a red flag. Be careful of buzzwords. Check for sections that are copied and pasted, and also check for typos. These are clear signs that the white paper wasn't taken very seriously. So the next one in our list on plans is, do they have a clear roadmap? Roadmaps give the team accountability. It also gives more insight to their strategic thinking. And roadmaps usually are fairly easy to find if they have one. Have they been accomplishing their roadmap so far? Are they hitting their milestones, or are they missing deadlines? Again, these could be red flags. Check their GitHub. Now, this is something I don't always do because GitHub can be a bit technical. But if you have the ability to look into the technicalities of a protocol, then might as well check out GitHub. Look for consistent developer activity. Now, we don't have to be technical to be able to see, well, how much developer activity has been going on with that protocol? How is it? You want to see progress in the protocol. And the only way you're going to have progress is if you have developers working on it. Okay, next, we just had a new member join the mastermind, so yay. Thank you for joining us, Michael. So the next one, the last one here on the plans is, does the project change strategy constantly? This is another red flag. Pivots happen, but constant pivoting is a red flag, especially if it is to whatever the newest narrative is. Look for clues, constant delays, people getting banned for criticism, GitHub dead, I'm not sure what that means, and emotional responses. Again, blaming other people for their lack of success, another clear red flag. And if they don't have clear direction, which means that they're jumping around from, well, today we're going to focus on, our project's going to focus on this, and next month it's going to focus on that, that's a sign that they're not gaining traction and they're just kind of grasping at straws. So there you have it for people, products, and plans. Let's see what the next one is. The next and last topic in our PPPF framework are financials. The first one is, what is the supply and what is the max supply? This will show how many tokens exist currently and what's the most that can ever exist in the future. This will help you understand future dilution of your investment. Look for investments with more coins in circulation. Another reason for wanting to do that, and that it may actually come up here in a bit, but I'm going to say it now, is another reason for wanting to know what the total supply is, the max supply, and what is the circulating supply, is there's a way to look up and see when will more tokens get unlocked, because those token unlocks oftentimes are followed by selling pressure. All right, next on our financials is, what is the market cap and fully diluted market cap? Market cap is the price times the circulating supply, and FDM is the price times the maximum circulating supply, or the maximum supply, it may not be circulating. The relation between these can tell you if the token is undervalued or overpriced. This is another topic we could dive into quite a bit, but we're just doing an overview today. Next one on our list is, how are the initial tokens distributed? There are two broad categories of initial token distribution. Pre-mine is where the team distributes tokens to itself and insiders and early investors. A fair launch is 100% fair, meaning everyone has equal access. Unfortunately, most projects do what's called a pre-mine these days. One of the reasons, in my opinion, that Bitcoin is as successful as it is there was no pre-mine in Bitcoin. Bitcoin tokens, or Bitcoin assets, crypto, I'll say crypto tokens, those only get created when a block of transactions get validated. And then when that block of transactions gets validated, the company that validated it will earn Bitcoin. But when you pre-mine, there's no connection to the blocks, if you will, of transactions that get validated. It's just all done up front. And whoever did the pre-mine can decide, well, how much am I going to get? How much is the rest of the team going to get? How much of the VCs, venture capitalists, going to get? And how much we're going to leave left over for the general public to be able to purchase? And usually the general public ends up buying it at a higher price than the early people got it, because when they got it, it had a value of 0. So I really do prefer the fair launches where it's another topic that we could delve into quite a bit. Let's look at the next one under financials. What's the vesting or unlocking schedule? I just mentioned that a little bit ago. Let's talk about it some more here. Vesting refers to the time when early token recipients are allowed to sell their tokens. This is important to see when VCs and insiders could dump their tokens and cause a price crash. So that's what I mean by when tokens get unlocked, that usually when early investors invest in these projects, they're given a certain amount of tokens, but they're told you can't do anything with those tokens for a certain period of time. They're locked up. And when those unlock periods occur, then usually the VCs want to get their money back as soon as possible, and they start dumping them on the market, and that can cause the price to crash. And sometimes the price never recovers. Not always, but sometimes. Last on our list of the financials is what is the revenue of this protocol, if any. Protocols are businesses, which is why I often call them projects. And a business only exists with revenue. Watch for inflationary systems that exist only to bootstrap growth. Look for organic revenue. What that means is, are they just giving away tokens to incentivize people to come use their protocol? That happens a lot with airdrops. There's nothing wrong with airdrops, but it can be a great way to get the word out about your project. But if your project has no way of earning income, then I just don't see how projects like that are gonna stick around very long. And that would potentially not be a good gem. So you want to be able to see what revenue the protocol is producing. So I think that might be it. Oh, we have a little bit more we can talk about. So let's finish up here with this wonderful document that I have. I think we have this last page. So let's see what we have to say. The protocol and you. Is this investment? This is how you want to think about yourself in doing your research about a project. So the first things, the PPPF, we were looking at the project itself, the protocol itself, to see how it was doing. So now you want to look at yourself and you want to say, is this an investment or a trade that you're looking at doing? Investments mean you're holding for a long time, and a trade is usually a short-term thing. Differentiating this will help you. Differentiating this will affect you when it comes time to cut losses or take profits. In other words, you're gonna watch it more closely if you're gonna hold it short term, and you're gonna try to make a profit potentially in a short period of time, hoping that it either goes up or goes down, depending on if you're shorting. If you're holding it as an investment, you might weather some of the ups and downs, knowing that in the future you expect it to do well. The next one in this section is, when do you plan to take profits? This goes back to having an investment plan. In your investment plan, you should have identified what your time frame is like, what your timeline is like. Having a strict plan for taking profits and where those profits will be allocated is important. For example, if the token price doubles, you might sell half and convert it to Bitcoin or ETH or stables. And that is oftentimes a strategy that I recommend. You want to keep moving back into what I call the blue chip tokens. Even with these gems that you find, if you've doubled or tripled your money, you might consider taking some of that profit off the table and put it back in something stable. Are you allocating the proper bet size? This is really important. In other words, don't over allocate. You've got to manage your risk, and this is also part of your investment plan. Manage risk systematically. Adjust your strategy based on the market state, not your own state of mind. We're now in a bear market when this was originally written, which was last year, I believe. So it says we're now in a bear market, so be careful of high risk bets. Well, we are actually approaching another leg of this bull market. So this is a great time to find some good hidden gems and make he called it bet. I don't like to call it a bet. Make a transaction size. Decide how much you want to spend. You want to decide, you got to figure out in this gem that you may have found, is it high risk, medium risk, or low risk? And more than likely, it's going to be medium to high risk, especially if it's something that hasn't been around a long time, and that's why it's a gem, or if it's something that people haven't been paying attention to. So you want to be careful about how much of your portfolio that you risk towards this, might be 5%, 3%, 2%. Anyway, a small amount. So if you find one that you're interested in, avoid FOMO. Wait 24 to 48 hours before buying to make sure that you review the checklist and avoid FOMOing. Because if everybody's all of a sudden finding out about your gem all at the same time, it might start to have a price pump. You want to be careful and try to catch it on the dips as much as possible. And I think this is last on this section, is be aware of cognitive biases. Cognitive biases works against you. They're bugs in your brain. You know, that's a whole nother subject, and I'm not even going to try to go into it right now. But cognitive bias is really, in a nutshell, is about be aware of your own thinking, because our own emotional state, our own habits, our own thought processes, thought distortions sometimes, they can get in the way of making good decisions about something that we're researching. And I'm just going to leave it at that for now, because this is just an overview. And that is the end of my document that I wanted to share you. And I'm going to go back to the top here. This was the PPPF, People, Products, Plans, and Financials framework for researching high quality assets that haven't gotten the attention by the overall market, and they could have a good potential for doubling or tripling your money, or even more. So I hope you found this overview helpful. I am going to spend the rest of this month, October, diving into each one of these sections a little more deeply. So I hope you'll come back, maybe attend the live webinar. If you can't attend live, you can always go and catch the recordings in the MasterMind. You just have to have you have to be on the starter plan or above to access the recordings. So that's all from me for now. Let me jump back to my document and say that is all for today's webinar. So thank you so much for joining me. I hope you found the value. I hope you found value in the content. And if you did find something specifically of value that you really enjoyed, please feel free to leave me a comment. So as always, stay curious, keep learning, share your thoughts or questions in the group chat in the MasterMind, and I will be happy to answer them, and others in the group may answer it as well. So see you next week. Bye for now.